We're now inside the 24-hour window that could trigger crypto's biggest move of the year. The Fed's rate decision hits in 24 hours. We've all been waiting for this moment. Finally, rate cuts are about to get cut, but the markets have no idea which way it's going to swing. At first glance, you'd expect this to be extremely bullish. But then you take a look at the charts and are left wondering, what the heck is going on? Today, I'm here to clear up all of this for you guys and keep you from getting distracted by all the doom and gloom. Under the surface, capital is rotating faster than most people realize. Bitcoin flows are stable and coming in strong. Ethereum flows have even just turned more bullish as well. And altcoins, yep, they might have taken a little tumble, but many of them are setting up for a major rally ahead. One in particular just caught Wall Street's eye, and billions are starting to flow in. So in this episode, guys, I'll catch you up on everything from macro signals to institutional flows and show you where I believe the biggest upside is lining up next. And guys, you might have noticed as well, I've been off the grid for the past couple of weeks. I was out in Bali for the Sui thing. You guys have seen the interview with the Denny and the vlog by now. And it was a really cool experience. It did throw me off my loop for a little while. I haven't been to the gym, haven't been in the studio here in the office, but I'm back now and really interested to get you guys caught up on all the macro stuff that's going on. And today's a big show. So without further ado, guys, let's dive in and talk about why this next 24 hours is so important. And the altcoin, I think, is next to run hard. If you guys are excited for this video, do me a favor, destroy that like button. We're back in action, markets are primed, and let's get into it. The markets are already moving ahead of this announcement, right? This Wednesday at 2 p.m. Eastern, the Fed will release its next interest rate decision, with Powell taking the stage at 2:30 p.m. But the pivot may have already begun, and the data shows why. At first glance, inflation looks sticky. Headline CPI ticked up to 2.9% from 2.7%. But dig one layer deeper and the whole story shifts. Producer prices, which often lead consumer inflation, came in soft. PPI fell negative 0.1% month over month. And core came in at 2.8% year over year, which was far below the 3.5% forecast. This is what the Fed actually watches when they're looking to cut rates. Now stack that in with what's happening in the labor market. The US revised down 911,000 jobs, a massive downward adjustment. August added just 22,000 jobs versus the 75,000 that were expected. And even Powell's favorite metric, job openings per unemployed person, has slipped below 1 for the first time in years. This isn't a soft landing, ladies and gentlemen. This is a breakdown, a systemic breakdown, and the Fed knows it. Goldman Sachs just updated its forecast, calling for 3 consecutive 25 basis point cuts in September, October, and December, with a possible 50 basis points cut on the table if the labor market keeps deteriorating. Markets are already pricing that in. According to the CME FedWatch tool, there's now a 100% probability of a rate cut tomorrow. So we know that's happening, right? And the S&P 500 is already at all-time highs, along with gold. And every single time since the 1980s that the Fed has cut rates while the stocks were at all-time highs, they've gone to post even higher highs over the next 12 months. So the question obviously is, what does this mean for crypto? It means the liquidity engine is warming up again, and the market is starting to front-run the move, just like it always does. And guys, if you ask me what's happening over the next 12 months, are we at a 4-year cycle or not? You know, you might have seen 2 interviews that we just posted on the channel within the last month. One with Henrik Zeberg, which was really had a lot of good evidence behind it, calling for the end of the cycle. I just had another one with Ben Cowan that you guys will see tomorrow. Also, he believes this 4-year cycle is coming in. And then you had one with Arthur Hayes, which you just posted, which believes that we're going to continue to run well into 2026. So there's good evidence to back both of those things. And it does seem to me that things are just starting to heat up with the economy right now, with rate cuts, things that we've been talking about on this channel forever, the big beautiful bill, global M2 keep coming up, stablecoins keep coming into the market, all the regulatory clarity coming into America in Q4, but also things like the underlying economy that are so bad with all these jobs and unemployment and job losses and people Actually, I just saw something too on X today. Searches for help with mortgage are at all-time highs since the 2008 housing collapse. So that lends a lot of credence to what Henrik Zerberg was saying on the channel as well, that really people just don't have money. And so, but then what Arthur Hayes said on the channel was that, that if Trump and the Republicans want to continue to be elected, they need to give away free shit, right? Free money, stimulus, like they did maybe in the COVID times. So I think the most important lesson to take away here is that we just need to continue to pay close attention to the data and to see if we're possibly going to come to an end over the next few months, or we're going to run well into 2026. This rally marks the beginning of a monetary shift. Let's start at the sovereign level. Gold, it's up 39% this year, and it's had its best run since 1979. It just hit all-time highs again today. Central banks now hold more gold than US Treasuries for the first time in 30 years. 73% of them plan to cut dollar exposure, and over 40% are increasing their gold reserves. And Bitcoin is getting pulled into that same conversation. Tefra Digital published new modeling showing that Bitcoin's correlation with gold points toward a price window of between $167,000 to $185,000 in the months ahead. Meanwhile, a new bill in Congress would require the Treasury to study a strategic Bitcoin reserve and begin designing a custody framework for federally held Bitcoin and other digital assets. Guys, let me know in the comments below if you think that a Bitcoin strategic reserve that's US will start buying Bitcoin is going to happen or not. I just saw another post today that Senator Lummis and Michael Saylor are in DC right now lobbying for it. So we'll see if that happens. If that happens, I think that's going to be a massive rally after that. But guys, remember, that's what happened with gold decades ago. Now it's Bitcoin's turn. But what happens when governments, corporations, and capital markets all realize they can't move fast enough in the old system? Well, they look for programmable money, and that's where stablecoins come in. Tether just announced USAT, not USDT, but USAT, a US regulated dollar-backed stablecoin aligned with the Genius Act. So apparently the USDT wasn't, but now their new one is, right? You also have Stripe, MetaMask, and Circle all rolling out their own stablecoin native infrastructure, and Wyoming just launched its own state-backed stablecoin. I don't know why we need all the stablecoins, but never know. But not everyone's excited. The Bank of England just proposed a hard cap, this is ridiculous, of £20,000 per person on how much stablecoin anyone can hold. Ridiculous. Their priority is the system, it's not their users, because this is how capital controls start, quietly at the edges, just like China and now England. I don't know what's going on with England. I'm just glad I'm not there. The old world is watching trillions of dollars drift toward programmable, permissionless money, and they're realizing something terrifying to them. They can't stop it. One thing for sure, though, is that it does seem like Bitcoin and gold are being realized as hedges against inflation, hedges against the debasement of fiat currencies. And I think that gold bugs and Bitcoiners have a lot more in common than they actually think. But here's the next signal that confirms everything we just talked about. Capital is already rotating. Last week, Ethereum ETFs pulled in $637 million in net positive inflows. Their first positive week after 6 days of outflows that started the month. Bitcoin ETFs, meanwhile, are still setting records. $2.3 billion in inflows in just 1 week, with total AUM now at $152 billion. But the capital flood is starting to hit the next layer of the market. The Altcoin season index just surged to 82, the highest reading since December 2024, total 2. The market cap of altcoins, excluding Bitcoin, has officially broken out of a 4-year wedge. Historically, that's the exact point when alt season erupts. But before you get too excited, make sure that you check out the interview with Ben Cowan that we publish tomorrow, because he has a very important point about this. And you also have DeFi. It's surging also. TVL is climbing to new all-time highs as capital is being deployed into protocols at light speed. And now we're entering the next frontier. Memes are going institutional. This Thursday, Wall Street is set to launch ETFs for Dogecoin, and some call it a meme, some don't, but XRP, under the 40 Act filing. The same prospectus also includes Bonk and even the Trump coin. There are no confirmed launch dates yet, but the wrappers are in motion. And remember, guys, these are the ETFs that are done like the same way the Solana one was, not quite the same as a traditional ETF path. So I expect much less flows from these, but nonetheless, there you have it. So we just watched Ethereum pull in $400 million. Altcoin flows are surging. Even Bonk is being wrapped into ETF filings. But the biggest move, it's happening on Solana. You got Forward Industries backed by Galaxy Digital, and they just completed the largest public SOL acquisition in history. 6.8 million tokens worth $1.58 billion, executed over 5 days at an average price of $232. And it gets even better. Instead of a passive balance sheet play, they're buying SOL to use it across Solana native DeFi, staking, lending, liquidity provisioning, the whole stack. And now Pantera Capital is joining in as well. Not only have they launched a new public vehicle called ticker HSDT, the Helios Solana Digital Treasury, listed on NASDAQ and open to everyday investors, but they've literally just gone all in on SOL. Not all in, but it is their biggest position. Just listen to Dan Moorhead from Pantera lay out his SOL thesis.
Our biggest position is Solana. We have 1.1 billion of Solana on our books. But, you know, Solana is only 1/20th of the market cap of Bitcoin. So I think it can outperform over time. And I think it's our current opinion that it outperforms Ethereum.
Guys, let me know in the comments below if you agree with Dan. Is SOL going to be the biggest runner? Is it their best decision? Think about this for a second. Remember when the first Ethereum treasury strategies were announced a few months ago? We ran those on this channel as well, and ETH nearly doubled in just a few weeks. Now look at Solana, smaller market cap, thinner books, and these flows are already pushing into the billions. You don't really need a whole lot to move the needle here. The effect is outsized and the pressure is building. But you know, what will really move the needle for me? I mean, I think Solana is, like, for all the reasons we're talking about this video and the ones I'm about to tell you guys about, I'm extremely bullish. But I keep going back to the interview we did with Matt Hogan and James Seyfarth from Bitwise and Bloomberg, where they said that they didn't think that, you know, like, it was basically from Wall Street, Bitcoin and Ethereum, and then like way down the list is like Solana and maybe XRP or something. So I keep going back to that. What I really want to see is like BlackRock or one of the or Fidelity or something file a Solana ETF. Then I'd be insanely bullish on it. But nonetheless, this is all happening and probably going to have a big run soon, Solana. Just a quick word from our amazing, wonderful, trusted channel partners. Imagine this. Bitcoin hits $1 million. Solana smashes through 1,200 and Sui skyrockets to $100. Now, imagine the tax bill when you finally cash out. Yeah, guys, that hurts. Uncle Sam's going to crush you on it. But what if you could stack all that upside tax-free? With Bitcoin IRA, you can. It's the retirement account built for crypto believers. Zero boring paperwork, zero mutual funds, and all the upside of Bitcoin and your favorite altcoins growing in a tax-advantaged manner. Rolling over your old IRA or 401k just takes a few clicks. Over 200,000 people are already using it, so your future doesn't get left behind. If you want to keep more of your gains and let your coins work for you and not the tax man, get started today, guys. Click the link below. Let them know Kyle sent you, and you can earn up to $1,000 in rewards. And you ever felt crypto rich, but your bank account telling you guys a different story? That's me for ages and still me right now. My portfolio looks great, but when it comes time to pay for dinner or groceries or coffee or flight, whatever, moving money around was always a hassle. Then I found Xapo. With Xapo card, I can load up with Bitcoin or stablecoins and send them anywhere. Plus, it comes with a premium feeling black card so you can feel like a baller. No need to sell my crypto, no complicated transfers, just tap, pay, done. Anywhere Visa, MasterCard's accepted. High limits, real exchange rates, and up to 1% Bitcoin cash back. That is huge. And even daily interest on my cash. I can put cash in there, load it up, and I earn interest on it. Better than a bank account. Suddenly, my digital wealth feels a lot more real. Plus, if you guys sign up with my referral link and become a member, you can save $500. And yes, the card does cost $1,000. You save $500 with my account, so it's only $500, but you save, it's better than every other card on exchange rates, so you end up saving that if you use the card frequently. So guys, hit the link in the description below, get your Xapo card, and unlock your crypto for real life use today. And now back to our very important show. Now, some people still doubt whether Solana can really win institutional capital the way that Bitcoin or Ethereum did, what I just talked about. It doesn't have a like Michael Saylor or Tom Lee who's shilling on CNBC, so maybe Wall Street hasn't gone all in yet. However, here's the thing. Smart money always moves first and early. And the data supports this. Let's take a closer look at what's happening on the ground. The first US Solana staking ETF just hit new all-time high of $250 million in assets under management. That's regulated exposure to Sol Yield, a product built for institutions. DeFi activity is exploding as well. Solana just surpassed $13 billion in total value locked, the highest it's ever been. That's real capital being deployed into lending, staking, trading, and liquidity routing on top of all that speculation happening daily in the trenches. If you guys don't know, there's this whole new meta on Pump Fund of this streaming thing. Well, it happened before, then they stopped it because it was getting out of hand. I think it's the most ridiculous meta. Let me know, guys, if you guys are doing this Pump Fund streaming thing. I think it's horrible. I think it's more value extraction from the ecosystem, but that's where tons and tons of attention is on Solana and on Pump Fund. Not for me, but I guess it's for some people. Anyway, guys, the money is here, but the reason it's sticking is because Solana's infrastructure is just built differently than Ethereum, right? It's scaling faster than any other chain in the game. Well, Sui is actually faster, but Solana has way more users and way more attention, right? And while most narratives are still theoretical, Solana's performance is getting measured in milliseconds. Right now, block times average around 400 milliseconds. That's already industry leading, but the roadmap is even more ambitious. 200 milliseconds next year, and a push toward global finality in under 20 milliseconds within 5 years. That's not just blockchain fast. That's Wall Street warp speed. You got Mike Novogratz, the founder of Galaxy Digital, who said it bluntly. Solana is on track to overtake traditional capital markets. Check out this clip.
Why Solana at this moment? Total transactions per second Solana can do in a day is 14 billion. That's more than total transactions on equities, fixed income, commodities, and foreign exchange, right? And so you've got a blockchain that's now fast enough, tailor-made to be the blockchain for financial markets. And you got an SEC chair saying, I want you to build on chain. And so those two things are lining up. I'm calling this the season of Sol. Right behind us, you've got Dan Moorhead, who's coming with a Sol fund, a Sol Treasury company.
And the app layer is catching up to the protocol speed. We're seeing CLOBs, or central limit order books, go live across Solana native venues. That means pro traders can execute with precision. Solana DeFi is evolving to meet institutional demand. You got Jupiter, Phantom, Titan, DFlow. All of them are fighting to dominate the order flow game. And then you've got Solana's TPU upgrade and Alpenglow. They're also pushing block finality into the 100 to 150 millisecond range. That changes everything. From UX to execution to high-frequency trading routing, these upgrades unlock apps to do things that we've never seen on blockchain before. And the builder momentum is heating up as well. Recent channel guest and prominent Solana builder Mert called it a colossal DeFi renaissance. Crypto investor John Charbonneau said it simply: the next big trend is always unpredictable. All you can do is maximize your shots on goal. Solana has the strongest mix of builders, users, and infrastructure to make that happen today. So yeah, you got live streaming, tokenized stocks, app-controlled execution, on-chain equities, DePIN, gaming. They're all launching on Solana. You can see it in how trading bots like Axiom are posting new revenue records. You can see it in how prediction markets, token ops, and stealth dexes are all quietly going live every week. And now, with the launch of the Base to Solana bridge, devs can move assets, apps, and tokens seamlessly between ecosystems, between Base and Sol to Base. Base tokens can now deploy in Solana, SPL tokens can now show up on Base apps, and you can deposit Sol directly into Base. This is pretty cool, this cross-ecosystem functionality. This is like the future, right? Interoperability is the new game, and Solana's infrastack is wiring into every major frontier. And it's not just Solana, other ones are too as well, but we're talking about Solana here. The future is being built on high-speed chains, guys. And Solana is already proving it can deliver performance that matches real-world capital markets. So I don't think it's really fair to kind of compare Ethereum and Solana. I think they have different use cases. Right? I think Ethereum is always going to be the institutional app where the biggest value, the biggest money goes, probably, but maybe not. Maybe I'm wrong there. But I think in the short to midterm, Ethereum is going to be for the institutions, while Solana is going to be for more things that need higher speed, better user experience, real world user apps, things like that. But here's where it gets really interesting. Once big money starts flowing into an ecosystem, it doesn't just impact the base asset, it lifts everything it's connected to. A rising tide lifts all boats. And right now we're seeing that effect play out across Solana. Let's take Jupiter, for example. According to their latest team updates, Jupiter is positioning itself as the go-to execution layer for institutional capital. Their Jupe Sol product is reportedly the highest yielding major LST or liquid staking token in the ecosystem. Their lending markets support private loops for larger players, and their validator is already a top 10 by stake. That's the kind of backend you need when treasuries start deploying billions. And even Memecoins are feeling the ripple effect. Bonk is now being floated as a potential reserve asset by at least one NASDAQ traded company, which, I don't know, guys, let me know how you feel about this below. And there's chatter of a Bonk ETF in the pipeline. Again, is this just bull market mania or is this the future of Wall Street? Let me know in the comments below, guys, what you think. When capital arrives, it needs something to do. And every protocol, product, or token that helps route, lend, stake, or grow that capital, they all get pulled into the slipstream. And guys, if you want to know which Sol ecosystem projects I think benefit the most from Solana season, I'll put the link at the end of this video. Make sure you check that out. Right now, most Solana ecosystem projects are sitting near rock bottom prices when you compare them to the Sol trading pair, with only a few standing out as exceptions. That's exactly how the cycle rotation unfolds. First Bitcoin, then Ethereum, then majors like Solana, and very soon, likely, hopefully, fingers crossed, the rest of the altcoins will pop off as well. The goal is to get positioned before this wave hits. Now, is this going to hit this altcoin season? Well, I think that we're probably going to in October, November. And so it might be a good time, not financial advice, of course, to start looking to dollar cost average into the next wave, which is like the large caps, not the majors, but the larger caps, the ones we talk about in the Solana ecosystem video, for example. Now let's slow down for a moment because even with everything lined up for Solana, there are still real risks we need to keep in mind. Altcoin open interest. That's the amount of leverage money betting on altcoin price action just flipped Bitcoins for the first time this cycle. Historically, when this happens, it often lines up with local tops. Not always, but enough to treat it like a red flag or at least a yellow flag. In bull markets, 20 to 30% pullbacks are normal. We used to see 40%, 50%. That doesn't mean the trend is broken. It just resets the market before it continues higher. On the macro front, headline risks, they haven't gone away. There are still geopolitical tensions that could spark volatility. But right now, the technicals suggest that shallow dips are being bought up quickly. We may be entering a steeper momentum-driven phase. You know, there's a lot of crazy geopolitical things happening right now, right? And any one of those could one day create a black swan that we have to be careful of. So make sure you guys are being very, very careful of leverage. If you're in spot, then just spot and chill and don't worry about it too much. Because it appears, at least for now, at least for the next couple of months, at least, I expect the market to continue in its upward momentum. So guys, we're 24 hours out from one of the biggest macro catalysts we've had all year. And if you've been paying attention, you can already feel it's coming. Liquidity is primed, rotation is real, and Solana, backed by its strongest flows I've ever seen, is sitting right in the middle of it. So guys, until next time, stay sharp, stack your Satoshis, some Ethereum, because it's coming in strong, and now maybe some Sol, and I'll catch you guys in the next one. See ya.